So in thinking about inflation and just the general inflationary pressures that we have, separate from the housing market, but just general inflation, that can really be caused from two different directions. Initially, the inflation that we started seeing last year was really being driven by supply side issues. We had the supply chain constraints that were really making it difficult for businesses and households to get the goods and services that they wanted. And so that was driving up prices. When everyone was talking about inflation being transitory, that's really what they were talking about. And that supply-induced inflation, the Fed has no control over. They can't somehow get China to produce more goods and services. They can't get the ships into the ports and get them unloaded and get all those things forward. That's something that we just have to wait for that process to clear through. The flip side is the demand side inflation, and that has been stimulated much more by the federal government, by the low interest rates, and by the stimulus that the federal government has put into the system than I think we initially anticipated. Clearly it's there. That is the side that the Fed can control, and they're working very aggressively to control through higher interest rates. And that will slow down economic activity and thereby limit the inflation that's being brought on by that side. But once again, we shouldn't expect the Fed to be able to control the supply side inflation. That's something that we just have to suffer through until it's worked its way through the system.